Financing is the lifeblood of every agribusiness. No matter how brilliant your ideas or fertile your farmland, without adequate and well-managed funding, your agribusiness will likely struggle to scale or even survive. This module addresses where to get money, how to manage it, how to attract investors, and how to make financially sound decisions in the agricultural sector. We'll explore the different types of capital available, government schemes and grants, how to pitch to private investors, and how to keep your agribusiness financially healthy in a fluctuating market. Understanding the role of finance in agribusiness. Finance plays several crucial roles in agribusiness operations: startup capital, buying land, equipment, seeds, livestock, etc. Working capital, paying staff, buying inputs, fuel, packaging. Expansion. Capital, scaling up operations, opening new branches, or introducing new products. Buffer capital, withstanding low harvest seasons, pests, droughts, or price crashes. Quote, "Cash flow in agribusiness is like water to crops. Without it, everything wilts." Sources of agribusiness. Financing. Agribusiness entrepreneurs must understand formal and informal sources of funding. Each comes with pros and cons. Formal sources. Commercial banks offer loans but often demand collateral and high interest rates. Microfinance institutions, MFIs, easier access for smallholders, higher interest but less bureaucracy. Development finance institutions, DFIs, e.g., Bank of Agriculture, BOA, Nigerian Agricultural Cooperative and Rural Development Bank, NACRDB, grants and donor funding, DOT, from bodies like IFAD, World Bank, USAID, and government programs. Equity investors, venture capitalists, offer funding in exchange for ownership stake. Cooperative societies and farmer groups, pooling resources for mutual benefit. Agritech platforms, some offer finance in exchange for profit share, crowdfunding models. Informal sources, family and friends. Personal savings. Local money lenders, risk of high interest. Rotating savings clubs, AHO, Isusu, Adashe, etc. Investment readiness. If you want to attract investors, your agribusiness must be investment ready. This means, period. Having a clear business model, accurate financial records and projections, a defined value proposition, solid understanding of your market and competition, compliance with legal requirements, a capable team. Example, period. A tomato processing factory in Kaduna created a pitch deck with strong data on ROI, market demand, and job creation. They secured a 15 million Naira equity investment from a local impact investor. Creating a financial plan for your agribusiness. Every serious agribusiness must have a financial plan that includes startup budget, costs of launching the business, break-even analysis, when you expect to start making a profit, cash flow projections, monthly income and expenses, profit and loss statement, revenue versus costs over time, balance sheet, your assets, liabilities, and equity. This financial plan not only helps you manage your business, but is also essential when approaching banks or investors. Government and institutional support programs. In Nigeria and many African countries, several support programs are available. Anchor Borrowers Program, CBN. Input loans for smallholder farmers, youth enterprise with innovation in Nigeria, UN. Business plan competition for youth, NERSAL. DOT. Credit guarantees and insurance for agribusiness, FADAMA. Projects. World Bank-backed development funding, BOI/BOA Agric loans. Development bank financing with favorable terms. Keep up to date with grant opportunities and application windows. Financial risk management. Finance brings opportunity, but also risk. Risks include defaulting on loans, misuse of funds, price fluctuations, crop failure or disaster, fraud or corruption. Tips to manage these risks. Don't overborrow. Use funds only for the intended purpose. Have emergency reserves. Insure your farm or products. Maintain transparency and records. Case study. A successful agribusiness investor. Story John, a cassava farmer, started with 500,000 Naria personal savings and joined a local women's cooperative. After training, she accessed a 2 million Naria loan from BOA. She used the funds to process cassava into gari, branded it, and sold in Lagos supermarkets. Her success attracted a 10 million Naria equity investment from a food distributor. Today, she employs 20 people and exports to Ghana. Learning outcomes. After this module, you should be able to identify and compare different sources of agribusiness finance. Choose suitable financing instruments for their stage of growth. Prepare a financial plan. Understand what makes a business investor ready. Reduce financial risks in agribusiness operations. I look forward to congratulating you upon completion of this course.